So if you've been following the news, you know that people are excited about this symmetrical triangle pattern that is forming on the XRP chart, and they think there's going to be a very bullish outbreak to the upside. So what exactly is a symmetrical triangle? I'll actually show you how you can actually keep track of it for yourself and how you can use it to make better judgments, especially if you are a short-term trader, a swing trader, right? First thing I want to point out is Coinbase Advanced Dashboard uses trading view functionality, which is really helpful for charting up charts. Now, some people think this is all voodoo, astrology type nonsense. I'll let you decide that for yourself, but some patterns like support lines, resistance lines, ascending triangles, descending triangles, symmetrical triangles, that stuff a lot of people follow, so it does become a little bit of a self-fulfilling prophecy, especially because there's a groupthink environment where everyone is following these types of situations. So first things first, in the actual price chart, I always like to use candles rather than just a line because you don't really get a super clear picture with a line. So here, I'm going to switch this to candles. And then the next thing I'm going to do for the time chart, I want to point out that swing traders, which is kind of what I am. If I was a day trader, I would have 1 minute or 5 minute or 15 minute or even 1 hour candlestick charts because these shorter time frames allow traders to spot different patterns within a single trading session. But I am actually not into day trading. I don't want to open and close up positions in the same day. I just feel like there's better use of my time. So I select a 6-hour time frame because this allows me to find patterns that develop over several days or weeks, and this actually helps me to capture much larger price moves. So the first thing you do when you're working with these symmetrical triangles is you go ahead and you pinpoint the tops that are occurring that you can connect and create a line with. Now, these top points, they often form a resistance line, and that's where we're going to connect the swing highs with a downward sloping line. So I simply select this line right here, and then what I'm going to do is just place it where the actual top of the wick is and connect it across these lines here. So you can see if I do something like this, you can tell that this line is connecting these highs that over time have been forming lower highs, creating a line. And this line we will refer to as the resistance line. And now this go around, I am actually going to connect all of the low points with an upward sloping line right here. So you could see I'm actually using the wicks. What do I mean by the wicks? Well, you see that I'm not just paying attention to the body of the candle. If I zoom in here, you see the body, that's like the fat colored part. I'm actually paying attention to the top of the actual wick. If you're not sure what a candlestick is, I've made tutorials on it in the past. I'm sure you could find it all over the internet if you just do a simple Google search. And this method of actually using the wicks, it provides a more accurate view of the market as it reflects all of the price extremes. If I just did it using the bodies of the candle, it's going to ignore the extreme price spikes or the wicks, and it's going to focus on where the majority of the trading occurred. And although that method can provide cleaner and more consistent trend lines, especially in choppy markets, I actually prefer to use the wicks because it gives me a more precise and early breakout signals. Honestly, if you're an advanced trader, you're probably using both type of lines. You're using ones where you're doing analysis just looking at the bodies of the candles, and then you're using one where you're creating the resistance and support lines using the wicks as well. And I do want to point out that I just quickly did it. I didn't line it up perfectly. As you see, some of these wicks don't even touch the bottom of the support line. What you actually want is for it to touch the absolute top points in the resistance line and the bottom points in the support line. And you could clearly see that there was a pattern here where traders started to kind of converge with these resistance lines and support lines, and they were trading within this triangle. Now, what happens when the triangle gets smaller and smaller and it comes closer to the lines converging is you get less oscillation, and then eventually one of the sides wins. And in this case, we could see there was a breakout to the upside. Now, how can we calculate how far this breakout to the upside will actually go? Well, there is a trick there. So in technical analysis, they typically take the widest part of the triangle. So in this case, this part touches somewhere around $2.90. This part touches somewhere around, let's just say $1.85. But for the sake of this example, let's say this was $1.95 and this was $2.95. So you can think of it as a $1 range right here. And so what you do is wherever there's a breakout, you just add $1 to that. And that is how high you can expect it to go. So right here is around the $2.42 mark. So you can figure that potentially XRP very shortly will break out to $3.42. I do want to point out, this is definitely, absolutely definitely not a sure thing. This is just some people use this technical analysis to go ahead and make predictions about what the price can do. Also, a lot of traders will look for volume and a spike in volume to see that there's actually confirmation, to consider certain factors. So strong breakouts often occur with high volume, and they would have more conviction in that breakout if they did see this volume be actually higher than what we're even seeing now. Now, as I mentioned, you'll typically see the price just oscillate between these two lines, so the resistance and the support line. It's going to oscillate and eventually it's going to converge towards the apex. And what I want to point out about that is that the volume typically decreases as the price moves towards the apex, and a volume spike often confirms the breakout of the direction. So that is why a lot of traders will actually wait to see that the volume has picked up quite a bit to actually say with conviction, oh, we should totally invest. We should have a limit order in place here. And then it's going to go and add that $1 because the range here was $1. So now we should look to potentially reconsider our position closer to the $3.40 mark. Obviously, if you're more conservative, you're gonna say, I'm not looking to get close to the $3.40. I'm looking for $3.20 or $3.15. By the way, there's so many ways to chart this up. I'm just showing you one small piece of the picture, which is a symmetrical triangle. And the reason I'm doing that is because you can see here on Cointelegraph, they're mentioning that XRP price eyes $4 in the next couple of days in quotation marks because of symmetrical triangles. I do want to point out that all of these publications, they just need to write articles and they stare at these charts all day. When they see something interesting happen, they write an article about it, and they're wrong exactly half of the time because no one really freaking knows what the hell's going to happen. Crypto is a wild, wild game. So don't just rely on a simple technical indicator. And again, a lot of these move with Bitcoin. So if bad Bitcoin news comes out and Bitcoin drops to the floor by 10, 15, 20% tomorrow, you're going to go ahead and see that it doesn't matter how strong the freaking volume is and how convinced you are of a breakout, it is still just not going to happen. It's probably going to drop through the floor because the overall crypto market is dropping. But this is why a lot of people use this stuff for when they're day trading or swing trading. And by the way, algorithmic traders, they're absolutely destroying the whole day trading game. So I don't even know how much you could trust these things. The whole point of creating this video is just to explain so that when you're doing research and you see this type of stuff, symmetrical triangles, then you know exactly what they're talking about. If you wish for me to make a video on ascending triangles or descending triangles, I'll be more than happy to do so. I know a lot about this stuff because I used to dabble in day trading. I've not touched it in many years and I do not plan on touching it again. However, because I have all that knowledge, I am more than happy to share it with the rest of you. Let me know if you learned something in this video. If you want me to keep making videos like this, please leave a comment, subscribe, tell your friends about me. And again, don't just keep an eye on your crypto portfolio. Keep an eye on your mental health. Be nice to your loved ones. Live life in a balanced way. Don't just stare at candlestick charts because, kind of like people, they will disappoint you often.